You need to hear this if you're thinking about a mortgage. The key to better rates is simpler than you think. The loan-to-value ratio, or LTV ratio, is a crucial number in the mortgage world. It compares the loan amount to the appraised value of your new home. Here's a quick formula. LTV equals the loan amount divided by the appraised property value, then multiplied by 100. So if you're buying a home valued at $100,000 and need a loan for $80,000, your LTV ratio is 80%. Why does this matter? A lower LTV ratio means lower risk for lenders, which can translate to better interest rates for you. Plus, with a lower LTV, you might even sidestep private mortgage insurance, saving you more money. Want to dive deeper into how LTV impacts your mortgage rates and options? Contact Jcrmg, loan officer with Jcrmg Inc. today at 1-888-600-7577. Call Joe at 1-888-600-7577. Let's make your home ownership dreams a reality. Read full disclaimer at www.joceros.com. Doing business in California only. Licensed by the Department of Real Estate, DRE 02173635, NMLS 2418994.